Hi guys, Tim Melvin here. I meant to get a video out Saturday and instead I ended up at a bowling alley for a little kid's birthday party with my granddaughter. And it was a much better use of my time as it usually is when the kids and grandkids are involved. As you all know, I usually can be talked into setting work stuff aside to spend time with them. So we had a great time, and now we're getting back to work. It's Monday morning. Um, like a lot of you, I've spent a lot of the last week, especially in the evening, watching the news, just shocked that here we are again. The United States is not back at war, but there's a war being fought in Europe for the first time in many, many years, kind of almost since the end of the uh, Serbian crisis back in the 1990s. And this is probably the biggest war since the end of World War II. And it's just been incredible to watch today. I understand the Russians are really picking up on their bombing runs. Yesterday, they shot into people trying to flee cities, the only evacuation zones. They're considering allowing the Ukrainian population lead into Belarus and into Russia itself, which is a lot like giving the lamb an evacuation route right into the lion's den. The market, naturally, as you can imagine, is not a big fan of all this. We're down quite a bit on the Dow. We're heading into bear market territory. We're trying to fight our way into that, it seems, and things are really looking quite ugly out there, and the market's not overly happy about it, as you can imagine. The United States is doing what we can, as I understand it. We're sending as much aid as we can. We're trying to work with Poland to get planes. Poland will send them their Soviet style, their Soviet era airplanes, the MiGs, that the Ukrainian pilots know how to fly. And in return, the United States will send Poland some new planes to replace those they give to the Ukrainians to try to slow down the ruthless air onslaught. Naturally, the Russians have said that would be an act of war, as all of the sanctions were said to be an act of war. And apparently, the only ones allowed to do anything in that region are the Russians themselves. I don't know how this conflict is going to end. I do know that this is probably going to shift the balance of power in many ways across the globe. It's going to be a different world when this is over. I don't see how Russia doesn't end up with some sort of control of Ukraine unless we do, in fact, go into World War III. Ukraine is probably not big enough to hold off Russia forever unless there is some internal pushback inside Russia. This is going to go on for a while, I'm afraid. It's going to have negative impacts on the market. It's probably going to continue to be wildly inflationary, especially, unfortunately, for food and energy pricing. So, what do we do as investors now? Where do we hide? Where do we go? Um, Guys, I think that you continue with some things that I've talked about. The two big closed-end fund and fixed income arbitrage funds that are closed-end funds that I've talked to you about forever. One being BRW, that's Save a Capital Income and Opportunities Fund. They're going to do closed-end fund arbitrage. They're going to do opportunistic fixed income, and they do a lot of special purpose acquisition arbitrage, which honestly right now is one of my favorite investment and trading strategies besides our core small banks and all that, because you can usually set that trade up so that the worst possible outcome is a small gain. Then again, Bulldog and the Sabre closed-end fund does do mostly, I'm going to say, fixed income closed-end funds, whereas the Special Opportunities Fund run by Philip Goldstein, by the way, the SABA fund is currently yielding, just to get the numbers on the table here, right about 12.95%. Special opportunities currently at about 8.98%. That does mostly, seems the portfolio is mostly right now equity closed-end funds. So you might want to try to scale into this one. They also do an enormous amount of SPAC arbitrage. As I said, I love that business right now. I think it adds decent returns. You can end up with spectacular returns in some cases, but worst case, decent returns with very little chance of experiencing a loss of capital. That is not a bad outcome given what we're seeing happening in the global stock markets right now. I also, as I ran through looking at stuff, I found that stocks that are trading below liquidation value are actually positive for 2022. There's more stocks than there have been on a while on the list as markets have been collapsing. They're not to the, oh my goodness, that's so bullish, we're going to, sell off possessions to get as much cash into the stock market as we possibly can levels like we've seen in 2009 and back in 2002 and 2003. But it is creating a little bit more of a bullish setup than we've had in this sector for a long time. I'm going to give you one idea. It's NACO Industries. The symbol's NC. This is a very interesting mining company. My son-in-law, Garrett Baldwin, and I had a long conversation about this when I ran the numbers. It actually trades at a discount to what it could be rationally liquidated for in the current environment. They mine thermal coal. Oh, isn't coal such a horrible business? Well, thanks to really high natural gas prices, it's not right now. But what I really like about this company, all of their coal production is already under contract to large utility and industrial users. They don't have to worry about where are we going to sell this coal once we get it out of the ground. People don't realize we do still burn quite a bit of coal here in the United States, nowhere near what it was 10 years ago, but still more than enough for a company like NACO Industries to remain profitable. They also do contract mining, and one of their contract sectors is lithium, which, guys, this is going to be a huge business because lithium has uses in electric vehicles, renewable energies. It's going to be one of the highest demand metals in the world for quite some time going forward. The companies that mine it, including NACO Industries, symbol NC, should do very well. Stock is kind of basically flatlined on the year, building kind of a base. It trades for a substantial discount to what it can be liquidated for. I can see the stock easily and quickly doubling because thanks to higher natural gas prices, coal prices are going to go higher and they're going to stay there for some time. Pricing is set kind of globally for this stuff, and China and India are buying as much coal as they can, hand over fist, to keep the cost of running their industrial base as low as possible, with natural gas continuing to go through the roof and probably going to go even higher still, along with crude oil, as the situation in Ukraine continues to be a very harsh state of war thanks to the Russians. So what else do we have that's doing well? Here's a shocker for you. High yield, low PE banks continue to do very well. They've got a positive return on the year, which none of the stock indexes can say at this point in time. We love that strategy. It produces returns that would make hedge fund managers blush, and Warren Buffett give us an attaboy with a very low beta. It's a very low risk, high return strategy, in my opinion. So we're going to give you one of those two just to kind of put in your pocket and have, if you're not one of our subscribers that's already getting the community bank stock investor, you should be, that has that portfolio of high yield banks in there. Northwest Bank Shares, it is in Western Pennsylvania. They're on the edge of the Marcellus shale fields. They should start to see some increased activity and banking activity and opportunities and lending opportunities in that region as a result. Very well run, very conservative bank, a 5.77% dividend yield, trading at just 11 times earnings. They probably are not thinking about selling themselves, but every bank in the country of the size of this one is for sale at any given point in time, thanks to the ongoing consolidation trend that continues to work its way through the banking industry. Of course, our banking on profits portfolio also up for the year. We've had one takeover so far. I know the Biden administration has said, hey, we want to slow down takeover activity. Good luck, Mr. President, because I don't think it's going to work. The fact that you're imposing new regulations and bringing on anti-bank regulators to important positions at the FDIC and at the Federal Reserve is going to lead a lot of banks to say, well, you know what, I just don't want to deal with this. Rising cost of technology, going digital, and the need to provide additional cybersecurity is also going to fuel continued M&A as we get deeper into 2022. So I think that portfolio is going to have a fantastic year, pretty much irregardless of what happens in the Ukraine. I'm a child of the 70s. I still say the Ukraine. It's Ukraine, of course. and what happens with the war there. As ugly as that may be, I don't think it's going to do much to a bank like Northwest Bank shares, that is, sitting there in Western Pennsylvania, just conducting day-to-day community banking business. I think it'll be a real good year for banking on profit stocks. We're up on the year so far, doing much better than those in the indexes, and much, much better than those trying to aggressively trade short-term and pick bottoms in these falling markets over recent weeks. Also, mentioning Saba Capital, I've said Saba's come in, and under Boaz Weinstein's leadership, they have really become a massive player in closed-end funds. Somebody not too long ago called them the new sheriff of the closed-end universe. Done very well over the last couple of years. When they file a 13D and they get involved in a closed-end fund, it makes a lot of sense to follow them in, because they have been very successful at forcing changes and narrowing discounts. Just in the past week, they have increased their positions in the Delaware Municipals Closed End Fund. That is, hang on, let me get you a symbol. I had it written down and forgot it. Delaware. VFL, my apologies. They have a sizable position. They're working with management to try to reduce the 8% discount to net asset value. Excuse me. And there is a dividend that is 4%, 100% federally tax-free for U.S. investors. So it's sitting there. There's some interest rate risk to that. I don't think interest rates, they're going to go higher. I don't think they're going to go high enough to wipe out the full impact of the tax-free yield on this thing. That would be devastating for the balance sheet and income statement of the United States government. So the gradual increase may trim a little bit off the return on this, but I got a feeling we're going to see a discount narrowing. We collect some dividend payments, get the discount narrowed, and get out of this with a fairly low risk, double-digit rate of return by following Saba Capital. He continues to buy CEN, which is Centerfield Brookfield, the MLP fund, oil infrastructure. So you can buy all these pipelines and gathering facilities and storage facilities, just like the fund that we talked about last week, Salient, that they're also buying. That's SMM. The symbol on this one's CEN. It's a 14% discount to net asset value and a nice 5% dividend yield. These are some of the places, folks, where I think you can hide, earn a decent rate of return without having the full market risk, or being involved in large technology stocks that are just getting annihilated at this moment in time. So, of course, the other thing that we've watched with disbelief this week is the lockout in Major League Baseball. It continues. I've got to side with the players. I've read both proposals. I'm pissed off at both groups. Don't get me wrong. Y'all are making way too much money to do this. And this is a time where we could all use a little distraction in the form of baseball right now, with all the things that are going in the world. And of course, there is a new movement called Save the Game, run by a friend of mine by the name of Kevin Gallagher. And you can just Google that, Save the Game. And, doing some of the things to change the rules, to shorten the games, to have more day games so kids can watch it, and just bring back what made baseball so fun and exciting, instead of these 4-hour drudge matches that we've been forced to watch. And now we don't even have that, because they're fighting over the billions of dollars. The owners locked the players out. They wouldn't even begin to have conversations until it was time for spring training to start. They're refusing to budge on certain key points. And guys, if you're really not making money, open the books. They won't open the books, which tells me they're making a lot of money. Also, if you were losing as much money as they whine about, you'd be looking to sell your team. Also, you would be getting fire sale prices for your team, because you'd have to open the books up to the buyer. And when they saw that it was leaking red ink, they would, of course, pay you a very low price for your baseball team. That's not happening. This is a wildly profitable business. Do us all a favor. Quit trying to squeeze every last dime out of this game. Both of y'all make some concessions, get the game started, and let's play ball once again. This is a time in our country where I think we'd all love to hear those words: play ball, sit back, relax, and forget all the garbage going on in the world for 2 or 3 hours. Anyway, I'm Tim Melvin. Guys, I will get back to you probably Friday. We'll see how the week develops and plays out. And of course, subscribers, you will get your usual weekly newsletter sometime Friday, along with a buy list. I missed the buy list last week. It went out this morning. So anyway, I'm Tim Melvin. Thanks for watching. We'll talk again later this week.